Watch this before you buy Bitcoin. Bitcoin was named the best asset class of the past decade because its returns far exceeded those of traditional financial investment opportunities like stocks, bonds, and real estate. From 2010 till 2020, Bitcoin has generated on average a yearly return of 230%. And according to many, Bitcoin still has a lot more room to grow. But if you believe in the potential of Bitcoin, then buying Bitcoin on the open market might not be the best way to invest in it. I have found a much better strategy to invest in Bitcoin and get a higher return. In case you don't know me, my name is Weijerman, and in 2020 I sold a portfolio of 3 companies, and as a result I had quite some money sitting in my bank account, and I felt constant pressure that my purchasing power or the value of my money was being wiped out every single day. So I decided for myself that I had to invest this money. And of course, I made a lot of rookie mistakes. I made bad investments. But after a while, I cracked the code. And for the past few years, I have been a full-time investor living entirely from the income from my investment portfolio. And one of the cornerstones of my investment portfolio is Bitcoin mining. Currently, I'm running a Bitcoin mining farm with 80,000 plus Bitcoin mining machines. And in this video, I'm going to break down why I went so heavily into Bitcoin mining. And most importantly, I'm going to explain why Bitcoin mining could be a very great strategy for you to maximize your profits in this upcoming crypto bull market. In this video, I am going to share what the most important property of Bitcoin is. I'm going to share how Bitcoin is created. Next, we're going to dive into how you can beat the returns of simply buying Bitcoin on the open market. And finally, we're going to explore the institutional FOMO that is currently driving the price of Bitcoin up. And of course, I need to give a disclaimer here. I'm not a financial advisor. Nothing in this video is or should be considered financial advice. I'm making this video just for educational purposes. And before making any investment or changing your investments, make sure to do your own research and or consult with a professional financial advisor. And if you want to see more videos like this, make sure to hit the like button and to subscribe to my channel for more, because every week I'm going to be posting videos like this to help you to maximize your profits as a crypto investor. Now, let's dive in. Part 1 of this video is all about the most important property of Bitcoin. When Bitcoin was launched in 2009, something was embedded in its source code that was absolutely genius. But to truly understand this, we first need to look at something else. There is this website called the US Debt Clock, where you can see a real-time overview of the US national debt. Within less than a blink of an eye, you can see that the national debt already increased with more than 1 million. And if you're not in the US and you're thinking, okay, this doesn't apply to my country, yes, it does. Governments around the world are printing money constantly in order to keep their economies afloat. Against that backdrop, Satoshi Nakamoto created Bitcoin in 2009. And one of the most important properties of Bitcoin is its limited supply of 21 million Bitcoin. In a world where governments can print trillions with a few clicks of a button, people are desperate and want to find ways or want to park their money in assets that can help them to protect their hard-earned money against the devaluing of their currency. And of course, one of the best ways to do that is by parking them into assets that increase in value over time. And there's plenty of options out there: stocks, bonds, real estate, watches, gold. But here's the thing. Even though those assets are scarce, more houses can be built, more stocks can be issued, more gold can be mined, more watches can be manufactured. So they are scarce, but their supply can still be increased, although at a limited rate. But with Bitcoin, it is not possible to further increase the supply. There is a hard cap of 21 million Bitcoin. But how are those 21 million Bitcoin created? Which brings us to the following part of this video. How is new Bitcoin created? To explain this, I'm going to make use of an analogy that everyone should be able to understand. If you have a bank account, of course. So if you're transferring money through the bank, 2 things happen. Number one, money gets deducted from your bank account and it gets added to someone else's bank account. And the second thing that happens is you pay the bank a transaction fee for processing that transaction. Now, whenever you're making a transaction on the Bitcoin network, actually the exact two things happen. Number one, Bitcoin gets deducted from your wallet and gets added to someone else's wallet. And number two is you pay a transaction fee to the Bitcoin network. But who is the Bitcoin network? Those are the miners. So basically the miners are the banking system of Bitcoin. The nice thing is that anyone can buy special pieces of hardware and become a miner, or to put this machine to work to mine Bitcoin for them. And these miners also have a second income stream in addition to the transaction fees that they're earning. And we call this the block rewards. So how do the block rewards work? Well, all of the transactions happening on the Bitcoin network get bundled together into blocks of transactions. The miners then process these blocks of transactions, and every time a block of transactions is processed, block rewards get paid out to miners. In 2009, when Bitcoin was just launched, miners were rewarded 50 Bitcoins for every block of transactions that was mined. But every 4 years, this new supply of Bitcoin that gets earned by miners gets halved. We call this the Bitcoin halving event. In 4 years after 2009, so then we're talking about 2013, this block reward got halved to 25 Bitcoin. Well, this halving happened a few more times, and now the block reward is somewhere around 3.125 Bitcoin per block of transactions that get released to the miners after processing every block of transactions. And this is how new supply of Bitcoin is actually brought into circulation. Those are the block rewards. Right now, approximately 90% of all Bitcoins have been mined. And because of the halvings, it will take more than 100 years for the final Bitcoin to be mined. That should be somewhere around 2140, somewhere around that time. You can look it up on Google, when will the last Bitcoin be mined, and probably that year will pop up. Now let's move on to the third part of this video, and that is how to beat buying Bitcoin. There is a way to outperform buying Bitcoin on the open market, and that is mining it. But this strategy only makes sense if you believe that the value of Bitcoin will go up over the long term. Let me explain. Again, I would like to make use of an analogy that everyone should be able to understand, which is mining gold. Whenever you're going to mine gold, you're going to invest in a few things: in land, in people, and equipment. And after making those investments, you should be able to produce gold below its market value. And the higher the price of gold becomes compared to your production cost, the higher your profit margin becomes. The same holds true when you're mining Bitcoin. Whenever you're mining Bitcoin, you invest in equipment and you pay electricity. And the higher the price of Bitcoin becomes, the more profitable mining actually becomes. There are three variables that are influencing your profitability as a miner. And the first one is, of course, the price of Bitcoin. If we look at Economics 101, we understand that the price of something is determined by supply and demand. There is less and less supply available because Bitcoin is becoming more scarce. And on the other hand, the demand for Bitcoin is only increasing. We see that countries are buying Bitcoin, investment funds are buying Bitcoin, asset managers are buying Bitcoin, publicly traded companies are buying Bitcoin, and the average investor also wants to get their hands on some Bitcoin. There's simply not enough Bitcoin to go around for everyone. And normally, whenever demand far exceeds supply, it means that the price of something will go up in the short term. The second variable that is impacting your profitability as a miner is the purchase price of your machines. The easiest way to get access to cheap machines is to let someone else buy them in bulk. We buy hundreds of machines every single month, and as a result, we're able to acquire them at the lowest possible rates. And as a result, it saves you a lot of money and it improves your returns as well. The last factor that is influencing your profitability, that is of course your electricity bill. The average electricity rate in the US is somewhere between 8 to 10 cents, and in Europe it's somewhere between 15 to 50 cents per kilowatt hour. We, Epic Mining, have built a mining facility in Ethiopia where we have access to cheap green energy at an electricity rate of 5.9 cents per kilowatt hour. This is way lower than the rest of the world, and as a result, we're able to maximize our returns as miners. Of course, you could try to mine at home, but most people simply don't have access to cheap electricity, the connections to buy machines, or even have the technical know-how to manage those machines at all. And that's why we created Epic Mining. With our turnkey mining solution, anyone can get started with mining Bitcoin. So if you're curious how you can make use of our mining infrastructure, our hardware deals, or even use our cheap green electricity to maximize your profits as a miner, make sure to check out the link in the description below and schedule a call with me or one of my team members. On the call, we'll explain what our current mining hardware deals are and what these machines can generate for you in terms of returns in different market scenarios. We'll even give you a virtual tour of our mining facility and we'll explain the entire process, how everything would look like and work if you would decide to make use of our setup. So if you're interested in that, make sure to check out the link in the description below and schedule a call with me or one of my team members. So now that you understand how Bitcoin is mined, the economics of Bitcoin mining, and how anyone can get started mining Bitcoin, I want to share one more reason why I think Bitcoin miners are preparing for record profits this year. And that brings us to part 4, which is the final part of this video, which is the institutional FOMO in the Bitcoin market. There are many different participants in the financial markets, but the biggest distinction that we can make that is retail versus institutional investors. Retail investors are just normal individuals like you and me. Institutional investors, on the other hand, are banks, pension funds, and large wealth managers. Up till now, the Bitcoin market was dominated by mainly retail activity. But that all changed this year, especially since the Bitcoin spot ETFs emerged. BlackRock's Bitcoin spot ETF with stock ticker IBIT was the fastest growing ETF in history. And these spot ETFs play a very important role because they bridge the traditional world of finance with the new disruptive crypto space. And this creates the opportunity for billions of dollars to flow into the Bitcoin market. A lot more Bitcoin is currently bought up by Bitcoin spot ETFs than are mined on a daily basis. And that probably means that the supply shock is imminent. And if you ask me, that means as well that the price of Bitcoin should go through the roof very soon. There just isn't enough Bitcoin for everyone to go around. And the higher the price of Bitcoin, the more profitable mining becomes. In 2021, Fortune magazine published an article stating that Bitcoin mining was one of the most profitable business models on the planet. That year, Bitcoin miners raked in record revenues of 16.7 billion. But with everything that is playing out right now, I think miners are getting ready to crush that record very soon. So exciting times ahead for Bitcoin miners. Hey, I hope you found this video useful. If you did, make sure to like this video and subscribe to my channel for more, because every week I'm going to be posting more valuable videos, tutorials, and breakdowns that will help you to maximize your profits as a crypto investor. And also, I just linked 2 more videos up here, which I highly recommend you to check out if you're interested in these topics. All right, that being said, peace out. I'll see you in the next one.